Hello everyone, and a warm welcome to all of you on behalf of the Sharekhan and the Adviseline team for our 9th quarterly webinar. I am Tracy Renji and I am the manager at the Sharekhan's Adviseline and the Currency Dealing Desk. Friends, from the year 2000, when Sharekhan was incorporated, our basic idea was to not only provide customers a trading platform, but also to provide the best research to them and develop them in the trading activity. Now, to do this, Sharekhan has always been coming out with new technology and coming out with the latest ways as to how the research can be provided to our customers at the earliest and the fastest possible way. In an effort for this, what we did is that in 2004, we launched a dial and trade department where those customers who did not have access to our research platforms or to the website could call up dial and trade inbound and place their orders and also get research recommendations. Now, even in this, we could not help the problem where the customer would get the research recommendation on time. So, in the year 2007, we realized that we can combine our technology with the latest communication mode that is used by the customers. It's a computer and the telephone, and give our customers the best of research advice on time. Now, that is the reason in 2007 we launched Adviseline, which provided the customers a facility where the moment a research recommendation is generated, it is sent to our customers as soon as possible via telephone and via email and Yahoo Messenger. Now, the moment the customer receives the telephone call, he not only gets to know the recommendation which is there, he also gets a facility where he can get transferred to the dial and trade department and he can place his orders immediately. Thus, his first concern gets sorted, he gets the research recommendation and he actually gets to trade on it. Along with that, Adviseline ensures that the customer gets a feedback on the research, on the trade that he has done. Thus, he gets a proper feedback on the trades that he's executed. This brings us to our objective at Adviseline, that is to facilitate a customer's progress through the full cycle of action, information and feedback by providing customized research on time with the facility to execute the trades immediately and receive performance update on the trading and investment activity. Thus, the entire cycle is completed by getting the SMS on the phone call and getting an option to place orders and getting a feedback as to what has actually happened with the trade that was executed. The performance update for the month of August, where we have outperformed the market as compared to Nifty. We have given a 9% return as compared to just a 2% return of the Nifty. In the month of September, we have given an 11% return as compared to just an 8% return of the markets. In the month of October, though both the market and Adviseline has given a negative return, but we have still outperformed the market by giving a negative return of just 0.74% as compared to minus 1.5% of the Nifty. In the month of November, of course, we have underperformed the market by giving a negative return of 1.5 as compared to a positive return of 5% by the Nifty. Overall, friends, we have still lived up to our challenge of trying to give you the best return in the market by giving an 18% return as compared to just a 12% return by the markets. Let me now tell you all about the new updates at Adviseline. We have the active trading cell, friends, which is Sharekhan's new program where we bring the classroom to your home. A lot of our customers do not have enough time to go attend training sessions on how to trade in the market, how to trade in equities, how to do your own analysis and those kind of things. In order to help customers with that, Sharekhan has started a free training program called the Active Training Cell, where customers can attend live training sessions by just sitting at their home and learning the markets. Our Adviseline we have combined with active training cells, and we conducted training sessions on 3 of our Adviseline products, that is Smart Charts, Derivative Idea and Hammock. Any customer who needs to know more about any of these products just needs to register on the website with the active training cell link and attend the sessions based on your convenience. Also, friends, we have launched the dial and trade line for currency, Dial trade already had equity and commodity. We have started currency also on dial trade. All you need to do is call up on the dial trade numbers, press 1 for equity, 2 for currency and 3 for commodity. Friends, a few of the advantages of trading currency market would be currency trading can be done by anyone who's traded in futures and options. So in case you even have a basic idea of how futures and options are traded, you can easily trade in the currency market. Not only that, friends, the margins in the currency market are very much lower as compared to a regular equity futures and options. In case you want to take a currency futures, all you need to invest is around 2000 to 3000 rupees, in which you can trade in a currency future and easily get out of it without getting the pinch of having to invest too much. Also, currency markets, friends, are open from 9 o'clock to 5 o'clock, which means you get more time to trade. And in case you do not feel like you want to get out of the equity market into the currency market, all you need to do is once your equity market is closed at 3:30, you can go ahead and trade in the currency market till 5. Also, friends, there are only 4 currencies to choose from, which means you do not get hassled by too many options. All you need to do is go through the 4 currencies and decide which one you need to trade in. We also have research recommendations by our research team. All our research teams, that is a fundamental research as well as the technical research team, which provide products for us Adviseline, also provide research recommendations for the currency. All you need to do is call up dial trade and the recommendations will be provided to you. And currency, friends, is very easy to track. All you need to understand to trade in currency market is what is happening in the economy. So you just hear that the inflation has gone up or some good news in the economy and you know your currency market movement. That's as simple it is to trade in currency. Still, in case you want to learn about currency as to how you trade in the currency market, all you need to do is go to our active training cell link and attend one of our live sessions on currency markets. We have basic sessions on currency as to what currency market is all about. We also have advanced session on currency to show you how you can do your own analysis when you're trading in the currency market. Friends, this is all about updates on Adviseline. I'll hand you over to the research team. In case you have any doubts, please buzz us on Yahoo message, your product Yahoo ID, and we'll be glad to assist you. Thank you. Have a happy new year.
Hello friends, welcome to the Sharekhan Adviseline offering for the this month. We're gonna come out with the current offering that we have is MID delivery. That is almost same as the smart trade ideas that we used to operate a few months back. So right now we'll have a look on to what's the MID delivery product is about, what are the changes that we have done in this new MID delivery product, which would be definitely useful to the RMs as well as to the end clients. The product rules and features coming on to the MID delivery is that it's against the CATS segment, so it's the long only product, same like the smart trade. It provides stop loss as well as the targets at the time of the initiation of the call. Now this is the kind of the main broad we have changed in this MID delivery. Initially in the smart trade which we used to operate, we used to just give a call on buy Reliance at the current market price. We never used to give the stop loss a target, but we have made changes. Time frame is maximum 15 days. Before it was 1 month, so that is also again a good part that we have changed onto this product. No weightage defined at the time of the initiation of the call. Initially we used to say 6% or 12%, but in this case there is no fixed weightage, but we would advise and recommend to buy in equal quantity. Performance review done on the basis of strike rate, but not on the percentage that is returned. This is like how many calls have gone right or wrong, which we will be having a look on the next slide. This is the MID delivery performance from the August to the November 2012. If you have a look at here, August, the number of calls 30 and the strike rate was 57. That's more or less the market was kind of picking up on that month. In September, we saw the market gaining the most in this year, and also the FII investment war at the peak in the month of September. So that was a month which was definitely a good month for the MRI delivery, and we came out with one of the best strike rate, that was 72%. October, again a lean month, 30 calls were given, 37 strike rate was the lowest. November, 35 calls, and the strike rate was 69. Also the market was doing phenomenally well in the month of November. All in all, in the month, from the month August to November 2012, was 134 calls being generated. 60 is the strike rate that we have maintained, which is almost more than in the line of the previous market's estimates. Number of calls and the profit calls are 80 and the loss making are 54. Now with the market picking up and the MID delivery being in the long only product, it will definitely going to reflect in the performance, which is shown in the month of November. So friends, if you're ready for a roaring advice, MID delivery product is the thing to go right now. Thank you.
Good day friends, this is Neerav Dalal from the Fundamental Research Desk. I would be discussing our product, the Sharekhan Top Picks product. It is a product where we actively track the investment portfolio of select stocks. Now if you see, the Sharekhan Top Picks product has a basket of a well-balanced basket of 10 to 12 stocks, which we pick amongst our active coverage of stocks. Currently we have about 95 stocks under active coverage, covering all the various industries, and from that we select 10 to 12 stocks which we believe are apt to gain returns ahead of the stock markets. Now if you see, our objective, our main objective is to outperform the benchmark indexes, that is the Nifty and the Sensex. Along with that, we also see to it that we try and outperform the CNX mid cap index. Along with this, we also look to maximize our returns in a way, and at the same time see to it that we minimize our risks and the volatility in the returns. We see to it that our returns are more stable rather than high return with lower risk rather than high return high risk stocks. Also finally, along with a long-term view, we also at the same time try to get the returns in the near term from any near-term triggers that might be there on a specific stock or a specific sector. We review our topics basket on a monthly basis. Generally, we come out with the topics basket on the last Friday, on the first Friday of the month. What we generally do is, on an average, because of our long-term focus on our basket, on an average, there are only 1 or 2 changes in the basket. That also would be happening mainly on the back of some changes that might have been happening on the specific sector or that specific stock, or there is a change in the view on the stock from our sector analysts. What we generally do is we have a team of about 12 to 15 research analysts who track different sectors. We sit along with the research head and put in our views on the specific stocks, on the basis of which we come up with the basket of 10 to 12 stocks. Also sometimes what happens is, because of some changes or some negative news or some negative news on the stock, we might in the intra-month change a stock from our basket, but that happens very rarely, as at the time of research we look into we see to it that the stock that we are recommended is the best in terms of performance as well as corporate governance and all the other parameters for a stock to be investable. Also, when such a thing happens, we see to it that we notify other investors from the various communication channels. Also, if you see the returns of the topics basket, we've always had superior returns in as against the Sensex and the Nifty. Since inception in Jan 2009, we've outperformed the Sensex and the Nifty by a long way. In 2011, when the markets were down, our performance was much the performance of our stocks was much better than that of the Sensex and the Nifty. Even if you see in this graph, you see the orange line, that is the topics cumulative performance. It is much higher than what has been returned by the Sensex and the Nifty. Also, if we've tried and gauge how our performance has been, what our strike rate has been. Now, if you see since Jan 2009, out of the 47 months that have happened since Jan 2009, we have had a strike rate of 70%. That is quite good. That we believe that is quite good. Even in the current year. Year to date, in the last 11 months, we've actually outperformed the Sensex and the Nifty 6 times, and our strike rate is more than 80% at 81.82%. Now, if you see the current month's recommendation of the topics, we have now seeing the market performance and the mood of the market. We've made our topics basket heavier on the large cap stocks, because we believe that the market is in the upturn. Also, if you see we have high on the large cap stocks like Reliance, L&T, ICICI, BHEL and Axis Bank. Also, with the investment cycle expected to come back, we have put in L&T and BHEL in our portfolio. We've also put the pharma stock as well as the consumer stocks in our portfolio. And finally, we've put Relaxo Footwear, a small cap stock, which we believe would give strong returns to the investors. Overall, we always try and gauge the mood of the market and recommend our basket accordingly. Thanks a lot, friends, and happy investing.
Hello friends, I am Jatin Gedia from the technical research team, and I will be speaking about the Smart Chart product of the technical research team. The features, we will start with the features of Smart Chart. The technical research team generates the Smart Chart calls, and these are generated for a period of 1 to 2 months. These calls are ideal for traders who are looking for aggressive returns with high risk in the derivative segment, that is the future and option segment. Now, what is the method that we use for generating these calls? A primary tool for generating these calls is the Elliott wave principle. We follow the EWP, that is the Elliott wave principle, for generating these Smart Chart calls. We also take help of other technical analysis tools like the patterns like the head and shoulders pattern, which is a reversal pattern, or the triangle pattern, which is the continuation pattern. Momentum indicators, which help us to gauge the trend of the stock market, or the script, or the particular script which we are generating the calls in. It helps us to see whether the script is having a positive divergence, negative divergence, a positive crossover, negative crossover, etc. And the volume indicators, whether the rise in price is accompanied by the rise in volume, etc. These smart chart calls are generally generated with a favorable risk reward ratio of 1:2. While we generate these smart chart calls, we generally provide two targets. When the first target is achieved, we might book profits in that call, and sometimes it is also possible that we wait for the second target, and at that time the stop loss is trailed to the first target, or at a price where we feel it is good enough for the second target to be achieved. Sometimes what happens that if the bias of our team changes, we might exit the call even before the target is achieved or the stop loss is triggered. Now we will have a look at some examples of the smart chart calls and the process how we generate these smart chart calls. Now we are looking at a script called Punjloid. We can observe that Punjloid has been trading in a narrowing range and it has formed a triangle in this process. Now this triangle has been formed from starting from February 2012 and it has completed in November. Now this is a huge triangle and it has formed over a period of say 8 to 9 months. So, and this triangle has given a breakout above this resistance trend line. So at this point we generate a smart chart call for a target of 85. 85 is the equality of this wave which is taken from the low of E, that is the triangle's low, and we expect Punjloid to trade with a positive bias for target of 85 on the upside, and the stop loss can be placed at the 20-day moving average. Every day we can trail the stop loss to the 20-day moving average and hold the call up till 85. The momentum indicators have a positive crossover which supports our bullish stance on Punjloid. So this is the way in which our smart chart calls is generated. Another stock, another example of a smart chart call, in this we have shown Punjab National Bank. It has formed an inverted head and shoulders pattern. Now the neckline is placed at around 875, 880 levels. Now when this neckline is broken on the upside, a smart chart call will be generated for a target which is equal to the height of the head from the neckline on the upside, for targets of say 1100 on the upside. The momentum indicator have a positive crossover which also supports our bullish stance on Punjab National Bank. Now we will have a look at the overall performance of the smart chart calls. Here we can see that the chart, we can see the table showing the returns of smart chart mega. Smart chart mega is a product of scripts which has the price starting from 500 and above, say ICICI Bank, which is above 1000 rupees. So if we generate a call in ICICI Bank, it will be categorized in this smart chart mega. We can see that we have generated a return of 71%. Our strike rate has been a little lower at 36%, but we are constantly trying to improve that. The next is of smart chart 500, that is the price range between 250 and 500. We can observe that we have generated a return of 158% in this smart chart 500 category. For smart chart 250, that is from 0 to 250, in this category we have generated a return of 120%. Our strike rate has been highest in this category. Thank you.
Hello friends, good morning for the derivative idea webinar. Friends, the webinar we have divided into three parts, starting with the product description, then product characteristic, and then the overall written. Friends, so now let's start with product descriptions. Now calls in derivative idea is generated by derivative research desk, and it is a corpus based product with a minimum tick size of 3 lakh. That means that the client you have to maintain the account balance of 3 lakh in order to execute all the trades given in the derivative idea product. Generally we don't use 3 lakh rupees, but to keep the buffer and for the mark to market margin we require around 50 to 60,000 rupees if we touch or use the corpus of 2,40,000 or 2,50,000. The maximum drawdown in the product is around 20%. That means what is the maximum downside a product can take, or in a simple or layman language if I say, then what can be the stop loss for the product. If the stop loss hit, then no, it's advisable to close or the stop trading in the product. And this is best suitable for aggressive traders with a conservative approach. Now why we are saying that aggressive traders with a conservative approach? Because generally derivative being a highly leveraged product, so one can go and be aggressive into the product, and at the same time the majority of the calls are given in the product is strategies, and strategies is almost hedged by 85 to 90%. So you can have a higher leverage at the same time with a always hedged thing. So whenever any new strategy comes, it is predefined that what will be the maximum loss in the strategy and what will be the maximum profit. All those things I'll show in the detailed PDF report going forward in the presentation. Now the product best suits for traders who are looking for higher returns with a low risk or limited risk. Now whenever we come out with any of the new call, timely update is given through Trade Tiger, Yahoo Messenger, mail, Adviseline team, and even they forward the SMS to the clients. Now going on the product characteristic. Now only liquid F&O stock is considered while trading. That means buyer and seller spread. If say for example buyer is standing at 100 rupee and seller is standing at 110 or 100 rupees 5 paisa. So only those stocks which have ample of liquidity are considered when we come out with any of the call in the product. These calls are generated based on few of the derivative parameters, mainly known as implied volatility, cost of carry, open interest, and put to call ratio, and few of the another parameters. Now risk reward is generally maintained of 1:2 in any of the linear calls, in any of the linear future calls or any of the linear option calls. And generally for the strategy, risk reward is risk reward of 1:3 or 1:4 is maintained. That means if I'm taking a risk of 1 rupee, I'll make sure that the client earns a reward of 3 rupees or 4 rupees in the calls. Now depending on the analyst view, once the first target is come, either we trail the stop losses to the initiation price, or depend on the market condition, we'll partially book or book full profit in the calls or in the strategy. Now detailed PDF report is prepared or published whenever we come out with any of the new strategy call. This strategy report I'll show you in the presentation going forward. Now time frame in the product is generally 1 day to 1 month, and at the time of initiation, clients we tell clients that how many lots to buy and what rate you have to enter. So this is the format. Say for example derivative idea, so this is the kind of pop-up generally we send to the clients. Sell Nifty future between 5,990 to 5,995. Stop loss can be 5,625, and targets is target of 5,940 and 5,910. Now 2 lots is recommended, and time frame for this call is 1 day to 2 days. This is the format what we follow for the calls given in derivative idea. This is the report what we publish whenever we come out with any of the new strategy. Now here we mention the date. This is a necessary stats what require for the strategy stats, as in view on the stock name, what's the margin required for the particular product for the particular strategy, and what is the maximum loss and what is the maximum profit. Now in the first para of the report we give the view as in on what basis we have generated the call. In the second para we explain what is the strategy all about, and then in the third paragraph we define all these things is given in more detail in the third para of the strategy. And in the last page we give the payoff chart, how the profit and loss will perform depending on the stock price. Friends, this is the overall performance for the product. Now see, the maximum loss what the product has seen is around 5%, but we have seen that whenever we have seen that negative returns in the product, preceding months the product has done really well. Now current quarter we have seen that market was consolidating. We have seen that we have incurred a loss around 3.5% in the month of September, and the product has haven't done really well in the current quarter, but even the market was in the range, and we have seen that now the market has actually given a breakout, and then it has came out with a after a long time it has came out after the range. So now we think that volatility will be much higher, and we might see a very good return going forward in the product. This is the overall performance on a quarter-on-quarter basis. Now I started looking after this product from 2010. So now from 2010, if you have stayed invested in the product, or if you have executed all the trades in the product, we have generated 1,49,000 as a net return, which comes around 49.7% on a 3 lakh corpus. And this returns is exclusive of brokerage and tax. That means this is a net return what client has earned if they have followed all the calls in the product. That's all from the webinar. Thank you.